What's up, Bat fam? Welcome back to the Build a Trader YouTube channel. In this video, I'm going to be talking about backtesting. If you are unfamiliar with what backtesting essentially is going onto the charts and going over your trading strategy, reviewing the price action, taking setups that you see based on your trading strategy that you have, and then essentially you're just applying that strategy onto the previous price action throughout the previous week that just happened or throughout a later point in time, and then you just trade as if you would live markets. And then from that you take away some trading data, you write down how many trades you won or lost or break even, and so on and so forth. And this is how you sharpen your skills in order to apply your trading strategy to the live market over and over and over. And after that, you see if you have an edge in the market or not. You may hear the term find your edge in the market or backtest your strategy, which all that really is applying your trading strategy that you're learning and just going through it on past trading data and applying it and see if it's consistent for you or if you need to fine tune it or tweak it in some type of way. I'm gonna head to the charts. Let's cue that intro and I'll see you guys there. Alright, Bat fam, here we are on the charts. We're looking at US dollar against the Canadian dollar. So right now we are on the 4-hour time frame. To start backtesting, you're going to need TradingView Pro. You don't necessarily have to have it, but to use the bar replay mode feature, which I will be using, does require TradingView Pro. Now, if you're unfamiliar with the bar replay mode tool, essentially it's at the top right next to alerts, and you can choose a different point in time, and TradingView will remove all the data so that way you can apply your strategy, see how it works out, this and that, or how some type of market movement played out. But for this, we're going to start right here where I just clicked. And essentially what you do in backtesting is this. You're going to go through, mark up your charts like you normally would based on the data points that you're currently at. And then after that, you're going to apply your trading strategy by applying the risk to reward tool, by applying trend lines, support, resistance, supply, demand, this and that, whatever you use. But what I do, and if you guys have been watching my channel, is a price action based strategy based on market structure, time frame correlation, using candle patterns and key levels, and understanding how those all work together. You're able to find breakout trades and the highs and lows of certain areas of the market. So with that being said, let's go ahead and dive in here and show you guys how it's done. So I'm going to enter full screen. Like I said, we're on the 4-hour time frame. Now I'm going to just start marking things up. Okay, so we have a level of support down here. That was a previous major point of structure and a higher low point. Let me adjust this. Okay, this line is nice and straight. We have a level of resistance right here, this lower high point. It looks like a double top was created on a lower time frame, which is why it rejected, then came up and rejected again. And I only recognize this just from literally thousands of hours of chart time. Now guys, the best way you are going to learn, and the quickest way you're going to learn, not necessarily that it's fast, but you will learn at a much faster rate than everyone else if you backtest just like I'm doing right now and learn this stuff every single day. You need to make this a part of your life. You know, this isn't a game where you can just come in on the weekend and study up. No, you got to be on here almost every single day. You got to make it a part of your life, whether it's only 10 minutes in the morning, 10 minutes at night, an hour, whatever it is. You need to learn. You need to be on these charts. You need the chart time. So now marking this up. What else do we have here? There is a minor level right here that was broken in order to push down and make that low point. So if I were to make a decision on where the market would be heading, I would say we're heading down, just because one, we made a high here, a double top pattern up here, and broke this low in order to continue down and make this new low point. We're still bearish. There's been no change in structure. It did look like a double bottom was created here, but also was consolidating until it broke down. So now in order to try and find a trading setup, we need to do a few things here. So we can see that or from what I am identifying, that the market is bearish. We could have a pullback up to, something crazy could happen and it just breaks structure and we continue higher. But what I see is, like I said, bearish overall, and we should see the downward move. So now one could, in theory, take the trade here if they wanted to, but that's not what I'm going to do. You're going to scale down on the lower time frame. So I'm going to go down to the 2-hour time frame. You can see a few things here. The market looks like it's going to break its previous lower high or respect and continue down. If it breaks this, it's going to come up and create a higher retracement. If it respects, or if it shoots a little, it's just going to come down. Okay. The point of the lower time frames is to get more detail on what's happening. You can identify entry pattern type of candles, which are like engulfings and shooting stars and exhaustion type of candles, and those will show on the lower time frame if you can identify it early enough, and that's how you get a tighter entry point. So we're gonna start at the 15. So right now, in theory, I'd be looking for sells based off the overall direction that I just identified off the 4-hour time frame. You can see we're approaching a point in market structure, which is this blue line right here that I'm clicking with the yellow circle. If this level breaks, we're going to come down and possibly come down to another major point, which is down here, 2730. And I know there's a lot of data on this 15-minute time frame. However, once I switch back to the 4-hour, you guys are going to see this is just a pointed structure, a previous level of resistance. Okay, so now the next step in this, after you've marked up your levels, found certain areas, identified price action, and identified the direction of the trend, you're going to go down to the entry time frame, and then you're going to start clicking the bar replay mode tool, which is the forward, next candle, next candle, next candle, until you identify something that looks like what you're looking for. So to me, right now, as I was saying, we were looking for sells. The market is in a downtrend. We are bearish. We're looking for some type of bearish candle pattern to line up with the overall higher time frame, such as the 4-hour, to show that we're starting to push bearish again, right? So let me explain. We can see that there is a type of bearish engulfing candle here. This bearish candle right here on the 15-minute just took out these last 3 candles. This last 45 minutes of data, this one 15-minute candle just took out. So that's a strong indication that buyers are stepping into the market and that things could be lining up with the overall time frame for that bearish move that's setting up. Another way to identify this, that on lower time frames there are major and minor points of structure, major structure, minor structure, or macro structure and macro support and resistance, if you will. So this technically is a macro level right here, and if the market can break this little point, there's also a little macro resistance as well, which is why we have this rejection. So he kind of pushed up, rejected off of this. Now, like I said, I could be entirely wrong about the move, but this is what backtesting is. You're marking up the charts, applying your analysis, using your mind to identify, like, okay, I see this, I see this bearish setup, I see this bearish candle, I see the key levels being respected. This is all it is, the whole entire process. So now we can see, okay, if this level breaks, it looks like we could just start transitioning down, breaking down, right? Because if this little level breaks right here, it would indicate that we're lining back up with that bearish move. It's a domino effect. It has to happen in the lower time frame for it to slowly build up onto the bigger time frame, right? So what I'm seeing is the sell right here. We're going to take this trade. Oh, sorry, wrong one. We're going to take this trade here. I'm going to have the stop loss above the previous level of structure, above the previous high. This is what you need to do for stop in terms of stop losses. There is another way to do it, such as putting it below the previous candle. But in this situation, that's not what you want to do, because we're not seeing it break out right now. We're not seeing momentum pushing the market in one direction or the other. We're not seeing structure breaking. This just looks like a trade that's lining up with the overall downtrend and overall continuation bearish move. So for this certain situation, you'd want to put your stop loss above the previous structure point, above the previous lower high point. Because if you're wrong, this trade is invalidated if it breaks this high, okay? If it breaks that, it's going bullish for however amount of time or until it hits a certain level. However, if this level does not break where we have the stop loss and this area is respected, then it's going to continue bearish. So you need to place your stop losses in areas where your trade would be invalid, not in areas where you only want to risk a certain amount. You have to be smart about your stop loss placement. Not make it too wide, but obviously not make it too tight, but put it in a smart area for you to be able to take advantage of a certain trade without being prematurely stopped out. So let's see what happens next. Okay, cool. Instantly just pushed in our favor. That's what you want to see. That's only one candle though, so take some more time. Have some drawdown. And great, the bearish pressure and momentum's coming in. So it looks like this level's broken, right? I'm gonna extend this some. It broke to me so far. It looks like the 15-minute broke because we have a strong bearish candle, lots of momentum. It closed below this level. This next candle, how it's pushing up just a little bit, already looks like it's having some type of wick rejection. So it looks like this next candle will either come up and retest this or just continue bearish down. Remove that. There is a minor level of support slash structure here. So for me, this point right here is really important because there needs to be enough momentum to break this point to push it down to here. As well as, I'm going to adjust this because our target's down here. You could sell or take profit at this point. There's nothing wrong though. This is a good trade. It's a really good trade. You know, at this point you could go break even if you wanted to. Sorry, let me fix that. Yeah, at this point you could break even if you wanted to. Something like that. Or reduce your risk, put it above this previous wick, and either close at this point or this point. But we're going to close at this major point of structure, and this would be at the original risk, it would be almost a 3-to-1 trade, 2.9 to 1 trade, which is a really good risk to reward ratio. So we reduced our risk, trades pushing in our favor, running in a little bit of profit. Next candle bearish, should just continue down. Okay, we have a bullish candle. Just keep letting it play out. You know, these are just lower time frame retracements. You should not be getting shaken out by this. You know, at this point, your stop loss would be at break even. Sorry about that. My alarm is going off. I don't normally make videos this early. So back to where we were. Let me straighten this line out. Okay, so we see a bullish candle right here. These are lower time frame retracements. You don't want to get shaken out by these because on the higher time frame, it's not necessarily anything. They're just little movements. And you need to be comfortable with volatility and market movements because it's a live market. It's very fluid. You're going to see your positions move up and down. You're going to be in a good profit and then maybe a little less of a profit. Or you might be in a slight profit and then back to a slight drawdown. You know, that's how it is. That's just how it is. The market breeds and moves. You gotta understand that and accept that. Okay, so there is a major retracement smacking back into this level. At this point, we have our stop loss at break even, so we will not lose anything on this trade. One potentially could have taken profits down here, but we never even hit the level, so you know, this is where you got to kind of trust the process. And if we do get stopped out, you know, if this next candle wicks up and takes us out, that's totally fine because we can find another opportunity. Because essentially, this is a free trade. We didn't risk anything. So next candle, okay, we got stopped out. Risk-free trade, that's totally fine. So we're gonna move this over. Trade 1, break even. So that's cool. It did push in profit, but you know, it's all good. So it looks like this level could be respecting. If this area breaks right here, it's gonna continue bullish and shoot up as such. Right? If this level breaks, we're just gonna get some bullish momentum. However, based on how this candle just closed, and respecting this major area, we could see that next move down. So let's look for another opportunity to take that sell. Nope, not quite yet. This is definitely not looking like a sell anymore. Just wait, just be patient. You know, it could go up, it could go down at this point. I wouldn't switch your bias or be too quickly to take another trade after this, right? You need to wait for clear direction. And right now I'm on the 15-minute, so it's a little bit noisier than it would be. Okay, so now this looks like we're getting price action lining back up with this original idea that we had. So based how we just got this lower high and this strong bearish candle, looks like we smacked back into this previous level of structure and did not break above. We respected it. So now it looks like we could be lining back up with that bearish move that I was seeing. So we're going to take this trade again. I'm going to say we market order here. It's an execution 12795. We're at the low of this candle, you know, just enter, which is totally fine. You don't have to catch the wick every single trade. You know, that's very difficult to do. Sometimes the market might not come back up, and if you're waiting for that, you're going to miss the trade entirely. Okay, so we entered here. Now we're just going to wait and see what the next candle brings. Okay, we're in, have some drawdown. Okay, push back in our direction, and here we go. Market is slamming back down. Some drawdown still. There we go. We got that bearish move. Stop loss to break even now. So now we're going to be targeting this major low point still. However, for this particular trade, this is what I want to do in real life, in real time. If this level does not break right here at 1278, let me extend this. If this level does not break, then it's not going to come down to this level. There needs to be enough momentum to where the market just goes boom, breaks through it and just hits. Okay, that's what we want to see. We don't want to see anything messing around. We don't want to see any wick rejection, nothing like that. Just a strong bearish momentum coming into that level and breaking it. Okay, we kind of got a wick rejection, so what we're going to do is this, move our stop loss into a slight profit. You can do that, or depending if you have multiple positions open, say like you're risking a max of 1%, but you have, you know, 2 positions open. You can close one here because you see it rejecting and keep your other one at break even. That way you make a little bit of money, or you can trust your analysis entirely and wait to see if the market comes down, but risk being stopped out at break even. The decision is yours at that point to make, as you need to follow your own trade plan and your own trade management. Neither of what I just said is wrong. There's nothing wrong with holding your positions and seeing if it goes down to this major level. There's also nothing wrong with closing half your position for securing some of the profits that you have and moving your stop loss to break even. Those are both smart. Those are both wise things to do. It just depends on your mindset towards trading and how you trade, essentially. So for me personally, honestly, if I most likely would have had 1 or 2 positions open, because normally I don't have more than that, and then would have secured half or closed maybe all potentially. You know, I can't say, but this doesn't look the best. We are getting a reaction, but the next candle should hopefully break through it, and we should just, you know, push below this point and keep going. Like I am analyzing, so we'll see. Okay, and this is why, exactly what I just said. The market pushed back, failed to break below, failed to go lower, with respect to this previous structure that it just made right here, off of this lower point, and then shot up, right? And we would have been stopped out. At break even, you would not have lost any money on this trade, or you shouldn't have, because you need to understand risk management is the most important thing in trading. So you didn't lose any money on this trade. You may have secured half your position, which is a small profit. That's fine. That's good. You still made some money. You didn't lose anything. So in this backtesting session, we break even one, partial profits on another, and break even on half. So still in this trading session, we are slightly profitable or break even entirely. The only way to do that is solid risk management or walking through yourself in this process that I just walked you guys through, essentially. You know, this is literally backtesting right here. So, okay, this happened. So now what? Now that broke, now it's buys, okay? Because this sell is no longer a sell. That major point of structure is broken now, right? There's been a solid candle close. It should not look like this if it was bearish. It would need respect as it did right here. Then continue down and go lower, but we didn't. So now what? Now that the market has changed, in real time, a lot of times the market will be bearish pushing like this. And then like New York Open or later on, lower time frame structure will break, which will transition the market from an intraday perspective, in this case, from bearish to bullish. And if you can identify these changes quickly by using the lower time frames and understanding time frame correlation and market structure. So now that you can see this transition from bearish to bullish based off the price action, next thing we're going to do is look for buys instead, because one, we have a level here, this structure point that was broken. There's a lower structure point broken here, which initiated this move. But there's a level of resistance here that the market could come down and retest, and this resistance too. However, based off the momentum of this candle, I would say that it's only going to come back down to here, this blue level, and just continue as such. A boop and continue, just a slight pullback continuation move. So I would want to enter on this level of support at 12800 or around there. We want to see a wick come down to there. In this situation, the situation I was talking about where you can have your stop loss below the previous wick, this is one of them, because this trade would essentially be a momentum slash breakout trade. And you can see the point of structure is actually way down here, but that would require you to have a really large stop loss. Okay, which is why you can have it below the previous wick, because in theory, if the market is going to continue bullish with all this momentum, it would do a situation that I'm showing with the green arrow, or I'm going to draw one more. It would do something like this, pull down at this level, possibly even a little lower, and tap and shoot up. This is exactly what you would want to see, these two situations right here, for a continuation slash momentum move. If neither of these happens, then it's invalid. You always got to have a plan, and it's got to be an if-then scenario. See over here where I said, okay, if this level breaks, if these highs break, it's no longer bearish. Same thing with this. If this low point breaks, it most likely will no longer be bullish, because if there's a lot of buyers in the market, it's just going to continue pushing up. Okay, so I'm going to play the next candle. Okay, so we came down to this major point, seeing a reaction. The fact that it reacted this way is telling me possibly it could be a false breakout. We are in a little drawdown on this trade so far, not too much, as it didn't violate the setup and it hit the level of support. So we could see some more momentum just continuing off of this level, pushing up. However, if this is a false breakout above this level, then it's going to slam back down. And based off how this candle closed so bullish, it could have potentially sucked a lot of buyers into the market, faking them out. But we'll see. I'm still bullish based off of the things that I just said, and I'm going to trust the process. Okay, so we actually didn't get stopped out. We almost did. Almost, but we have it below the wick. We would have realistically been safe. Let's see how close we were. Maybe not, depending on the spreads of your broker, but we'll see what happens. So now the market is continuing bullish, and yeah, as you can see, based on this situation, I'm going to say we were not stopped out because the wick did not hit the stop loss. But during live market conditions, depending where the spread is and your broker and everything, you may have potentially been stopped out. It really depends if you had tight spreads and whatnot at that point in time. But as you can see, based off the analysis that I just said, we did push bullish. And essentially, this would be a winning trade. So I'm going to push the next candle. But at this point in time, one could potentially take profits just because you're seeing a wick here. It's gotten close enough to take profit. You would want to obviously go break even as it's pushed this much in our direction. And now taking profits is up to you. At this point, if you took this trade, you survived the drawdown, you didn't get stopped out, you'd be in a profit of 15 pips at the high, and currently you'd be running around 10 to 12 pips. So it's up to you. You can close right now, or you can try and see. Are we going to hit the high that we set? Are we going to trust our analysis? Let's see the next candle. Okay, we got a rejection, pushed, and hit take profit essentially right off that wick. So it just wicked up and, got us out. And next candle, yeah, pushed up. So winning trade. So we're going to call this a backtesting session here. This video is already about like 20 minutes long. However, as you can see, I walked you guys through this whole entire backtesting session. I told you guys my thought process through every single point in time on this chart. And this is all day trading is and all backtesting is. All right, this session we went 2 break-evens, 1 winning trade. That's a fantastic session if you ask me. Hope you guys enjoyed this video. Hope you guys learned a lot from it. Don't forget to join the free Telegram group. The link is in the description of this video. Don't forget to like and subscribe, as well as follow both Instagrams at Build a Trader and Bat Signals. I will see you guys in the next one. Peace.